Everyone talks about PayPal and Square, but is SoFi the fintech stock quietly setting up for a breakout? While the headlines are dominated by legacy fintech giants, SoFi Technologies has been quietly building something bold, a digital-first ecosystem that blends lending, banking, investing, and financial planning under one brand. It's sleek, scalable, and built for a generation that doesn't walk into bank branches anymore. But here's the big question. Is Wall Street overlooking the full SoFi story? Or is this stock actually undervalued in plain sight, hiding in the shadow of better-known names? If you've got eyes on the fintech space, smash that like button, subscribe to Stocks Telegraph, and let us know in the comments. Is SoFi a buy or just another busted growth name waiting to be forgotten? SoFi Technologies is not just another digital bank. It's a full-spectrum financial ecosystem. Originally launched as a student loan refinancing platform, SoFi has since expanded into a diversified financial services powerhouse. Its product suite includes personal loans, mortgages, checking and savings accounts, investment tools, and budgeting platforms like SoFi Relay. What makes SoFi unique is its vertical integration. The company owns and operates Galileo, a fintech infrastructure provider, and Technisys, a cloud-native digital banking platform. This means SoFi doesn't just offer services, it builds the tech that powers them, giving it full control of the user journey from front to back. SoFi's secret weapon is its ecosystem. Once a customer signs up for a loan, they're encouraged to bank, invest, and budget, all within the same app. This internal flywheel increases lifetime value and keeps acquisition costs in check. In 2024, SoFi reported a 34% increase in its member base, with members using more products on average. The return of student loan payments gave SoFi's lending arm a notable boost. Originations for the third quarter of 2023 rose 101% year-over-year to $919 million. Meanwhile, Galileo powers back-end infrastructure for many fintechs beyond SoFi, providing a B2B revenue stream. With 168 million enabled accounts and growing, Galileo's performance increasingly drives SoFi's top line. This two-pronged model, consumer-facing products and a B2B tech platform, allows SoFi to grow across multiple channels, reducing dependence on any single revenue source. As of April 2025, SoFi trades at a price-to-sales ratio of 3.56, higher than the industry median of 2.77, and a price-to-book ratio of 1.97, versus an industry median of 1.04. That premium suggests investors expect higher growth, but it also raises questions about valuation in a competitive market. Still, the fact that SoFi combines lending, banking, investing, and tech infrastructure sets it apart. Its model is harder to replicate and could justify the valuation premium if growth continues and margin expansion materializes. In the first quarter of 2024, SoFi posted GAAP net revenue of $645 million, up 37% year-over-year. Adjusted EBITDA rose 91% to $144.4 million. With net income of $88 million, SoFi showed back-to-back GAAP profitability. Its bank charter, obtained in 2022, is already paying off. Over 90% of SoFi's $10 billion plus in deposits come from direct deposit members, giving it a low-cost funding base and supporting a net interest margin of 5.83%. Risks remain. In 2024, SoFi announced plans to raise up to $862.5 million via convertible debt, creating dilution concerns. Its exposure to student loans is another risk, especially if delinquency rates rise. Still, the balance sheet looks solid, and the company appears well capitalized to pursue growth. Institutional interest in SoFi is strong. Nearly 38.5% of the stock is held by institutions. Vanguard and BlackRock lead the pack with 8.34% and 4.15% stakes, respectively. Insider sentiment is mixed. CEO Anthony Noto has repeatedly bought shares, most recently investing $1.78 million, while other executives have sold significant amounts. Analysts also remain divided, with price targets ranging from $6 to $20. The average 12-month target sits at $13.42. In January 2025, KBW downgraded the stock to underperform, citing valuation concerns. Yet many analysts remain bullish, expecting strong growth from SoFi's tech platform and cross-selling momentum. SoFi's digital native design gives it a leg up on traditional banks. It can offer integrated services with a modern UI and reduced overhead. Unlike legacy institutions, SoFi doesn't have to retrofit branches or legacy IT. Its tech platform is its most underappreciated asset. Galileo and Technisys provide recurring high-margin revenue streams. Together, they generated $395 million in 2024. Analysts believe this platform could represent 30 to 45% of enterprise value by 2030. The company has also posted 4 straight quarters of GAAP net income, proof that its model is maturing. Financial services and technology contributed 49% of adjusted revenue in the fourth quarter of 2024, signaling a move away from dependence on lending. If momentum continues and markets reward profitability, SoFi could re-rate significantly higher. SoFi's ambition pits it against both legacy banks and tech giants. Apple, Google, and others are expanding into financial services, and they come with huge user bases. SoFi's aggressive marketing and product expansion also pressure its margins, and while it's profitable on a GAAP basis now, sustaining that profit will be tough during economic downturns or if interest rates spike. As of April 23, 2025, SoFi trades at $11.74, just above its 200-day SMA of $11.52, suggesting potential for long-term upside. However, it remains below the 50-day SMA of $12.68. RSI stands at 47 neutral. MACD is mildly bearish at -0.85. The technicals show a stock in consolidation. Support is around $11.39 and $10.65. Resistance is at $13.09. Retail sentiment is split. Redditors on r/SoFi stock remain bullish, citing profitability and tech growth. Others remain skeptical due to volatility and dilution. Institutional ownership of 38.5% shows that big players are watching, but not necessarily backing up the truck. SoFi has the foundation of a modern financial powerhouse: strong user growth, diversified revenue streams, improving margins, and a scalable tech platform. The bank charter and vertical integration give it an edge few can match. The company is finally profitable and forecasts 20% plus revenue growth in 2025. Analysts like Needham have a $20 price target, implying 70% plus upside from current levels. Still, this is not a no-risk bet. Execution, competition, and regulation could derail growth. But for long-term investors who believe in fintech's rise, SoFi could be a high-reward opportunity hiding in plain sight. So, is SoFi a sleeping giant or a busted hype stock? Drop your thesis in the comments. We read every one. And if you're into deep dives that go beyond the headlines, subscribe to Stocks Telegraph, hit the bell, and ride the wave of smart investing with us. See you in the next one.